What if a regular software company wasn't just investing in a digital asset, but was actually building a modern-day monetary empire? Today, we're going to dig into this really fascinating thesis from our source material that says, yeah, that's exactly what's happening.
Okay, so let's just jump right in with the big provocative claim from our source. I mean, this is a super bold statement, right? But the argument is that it's all based on a pattern we've seen again and again throughout history. So the real question becomes, how on earth is this even possible?
And yeah, that is the big question we're going to unpack here. To really get how a company today could pull this off, our source material says we need to look back in time at two incredibly powerful blueprints for building financial power.
All right, let's dive in. Our first blueprint takes us all the way back to 18th century Britain. We're talking about the birth of a financial machine that would go on to power a global empire, the Bank of England.
See, what the source is getting at here is that Britain's real dominance didn't just come from its army. Nope. Their secret weapon was this revolutionary new financial engine. It could basically turn future tax payments into cold, hard cash right when they needed it most.
And this is the crazy part. The tool they used to do it was something called consols. Now get this, these were bonds that never matured. I mean, think about that for a second. The Bank of England could issue these things to fund massive wars, stabilize the whole currency, all because the debt was backed by something that seemed infinite, the governance power to tax its people forever.
What this did was create this incredibly powerful self-feeding loop. The bank controlled the government's credit, which meant there was always a buyer for its debt. And because it was so stable, capital from all over just flooded in. This cemented their power and let Britain do one simple thing: outspend every single one of its rivals.
Okay, so that's the state-run model. But now let's fast forward a bit and see how this idea evolved. In the 19th century, the same basic logic popped up again, but this time it was in private hands. We're talking about the Rothschild banking dynasty. This is our second blueprint, the private model.
And the Rothschilds, they didn't wait around for permission from any government. They built their own private network for capital that was just faster, more reliable, and way more efficient than any government treasury in Europe. Their money was gold, and their big advantage was all about speed.
So how'd they do it? Well, their edge came from this simple but absolutely brilliant three-step process. First, control the actual logistics of physical gold. Second, use the cutting-edge tech of the day, like the telegraph, to be unbelievably fast. And third, use that speed to create what we'd now call information asymmetry. Basically, they were making trades based on news that their competitors wouldn't hear about for days.
And this is how crucial they became. Right before the Battle of Waterloo, the British Treasury itself had to turn to Nathan Rothschild to get gold to its armies on the front lines. I mean, the state was literally outsourcing its most critical financial logistics to a private family. That put them right at the center of public finance.
So let's recap. We've got a state-run empire built on debt and a private empire built on gold. So how in the world do these two stories from history connect to a software company today? Well, this is where the source's whole thesis really clicks into place.
The company the source points to is MicroStrategy. Now, what they've done is systematically pile up over 3% of the total mined supply of Bitcoin. We're talking about a globally scarce, digital native monetary asset. This is the modern version of controlling the core collateral.
So here's the game plan, and you'll see it's the exact same logic from our history lessons. Step 1, get your hands on a scarce, valuable asset. Step 2, pay for it using cheaper capital, like debt, that costs less than you expect the asset's value to grow. And then, you just do it again, and again. And this chart right here, this shows you the engine that makes the whole thing run. It's all about the spread, that gap you see between the cost of borrowing money on the left and the historical growth of the asset on the right. As long as that asset keeps growing faster than the cost of the money you used to buy it, the system just keeps generating value that can be rolled back in to buy even more.
Okay, so we've looked at the historical blueprints and how it's being applied today, but our source highlights one massive difference in this new version of empire building, and it honestly changes everything.
This table lays it all out perfectly. Just look down the rows. The Bank of England, their collateral was future taxes. The Rothschilds, physical gold. And today, MicroStrategy uses Bitcoin. But the core strategy, whether it's centralized control, speed, or exploiting this financial spread, the underlying logic is exactly the same.
And here is the key difference. Unlike the state monopoly of the Bank of England or the closed-off private network of the Rothschilds, this new model is being built out in the open, in the public markets, with total transparency. Every loan, every single purchase, it's all public information. In theory, any investor, big or small, can get in on the action. And that brings us to the final, really provocative idea from our source. In this new world, the barriers aren't government charters or family connections. The entire playbook is laid out for everyone to see. The only thing standing in the way is understanding the strategy itself. So it leaves us with a question. If the blueprint for building an empire is now open source, who's going to be next?